As the guns fall silent and a fragile truce takes hold, Israel stands at a crossroads between recovery and restraint. The promise of a truce dividend, the economic relief and renewed confidence that often follow the end of a prolonged conflict, glimmers on the horizon. Yet for all the optimism, Israel's economy faces a long, uncertain road to genuine stabilization. The war's deep scars, fiscal burdens, and geopolitical tension could turn what might have been a dividend into a delicate balancing act. A war that shook the economic foundations. The war with Hamas drained Israel's financial and productive resources on an unprecedented scale. Tens of thousands of reservists were called into service, disrupting the workforce and halting industries from construction to technology. Entire sectors stalled as border regions were evacuated, and international investors grew cautious in the face of heightened instability. Government spending surged to sustain the military campaign and reconstruction needs, pushing Israel's fiscal deficit to its highest level in decades. Public debt has risen sharply, and while the economy avoided total collapse, its growth rate slowed to a crawl. Inflationary pressures and high borrowing costs have added to the weight on households and businesses already struggling to recover. Markets resilient but fragile. Despite the devastation, Israel's financial system showed resilience. The shekel stabilized after sharp early declines, and Tel Aviv's stock market even rebounded as investors bet on a swift post-war recovery. Yet beneath this surface stability lies fragility. Risk premiums remain elevated, investor sentiment is cautious, and the banking sector continues to hold back on dividend increases amid regulatory warnings about ongoing uncertainty. A durable recovery depends not only on financial optimism but on the restoration of real economic activity, factories reopening, exports resuming, and consumer confidence returning. For now, those hopes rest on the assumption that the truce will hold. The promise of a truce dividend. In theory, a sustained ceasefire could unlock growth on multiple fronts. The return of reservists to their civilian jobs would restore productive capacity. Reconstruction projects could fuel employment and infrastructure investment. Foreign investors, reassured by calm, might re-enter the Israeli market, particularly in technology, defense, and innovation. Tourism, which virtually collapsed during the conflict, could gradually revive. Private consumption, suppressed by uncertainty and high prices, might rebound, supporting small businesses and the service economy. If managed prudently, these dynamics could lift growth rates back above 3% within a year or two. Moreover, reduced military spending would ease pressure on the state budget, allowing resources to shift toward housing, healthcare, and education. For a society weary of war, this could represent not just an economic dividend but a moral one, the chance to rebuild trust and stability. Why the dividend may be delayed. Yet optimism must be tempered by realism. The truce remains tenuous, and the broader geopolitical situation fragile. Any resurgence of hostilities could instantly reverse investor confidence and derail growth. Even in peace, the fiscal and social scars of war will linger. Israel faces a heavier debt burden, higher taxes, and long-term costs of rehabilitation for displaced citizens and damaged industries. Externally, trade relations remain strained. Several international partners have grown critical of Israel's wartime policies, and diplomatic friction may limit export opportunities. Meanwhile, the reconstruction of Gaza, though necessary for regional stability, presents political complexities that could impede economic cooperation. Domestically, political divisions and public anger over the handling of the war continue to challenge governance. Without policy cohesion, fiscal discipline, and credible reforms, the benefits of peace may dissipate before they take root. Inflation control, budget realignment, and investment incentives will require difficult compromises. A cautious path forward. Israel's economy is not collapsing, but it is walking a tightrope. The war has underscored both its underlying strength and its vulnerability to geopolitical shocks. A truce offers a chance to rebuild, but only if stability is sustained and reforms are prioritized over short-term relief. True recovery will depend on whether Israel can convert military endurance into economic resilience. The truce dividend, if it comes, will not be a windfall. It will be gradual, hard-earned, and fragile, a reminder that peace, like prosperity, demands constant maintenance.